I don't know, I could go deeper in on liquidity, or, if because I think it's quite important. The market runs on liquidity. So understanding that is quite important, and how to identify it is quite important. And it's just as simple as looking at, like, usually it's like little weekends, like I explained before. So, that are usually haven't taken out one another. And by that, I mean, for example, this order block here, if it had of, see all these wick lows, if this black candle had it come down, to here, it's on the magnet, and taking out all these lows. So like the black candle took out it, then, we could have said it's like taking all these liquidity, taking out all the stop losses from here, and then price pushed up. I would have been much more, excited about this order block, because I know that it's had power. Someone with money has pushed down the market to be able to have enough power and like money to push down the market to stop out all these people. So, and also there's a lot less liquidity left. So say your order block was here, all these lows have been taken out. The liquidity, there isn't a big pool of liquidity here like there was before. There's no, or the only thing left is this single stop loss below this wick that was here. There's not like, stop losses here, stop losses here, stop losses here, 4 sort of big chunks of liquidity, like in terms of stop losses on the market, that the market knows that's like a big pool of money, if you've got so many pooling up. And that's kind of how it links into, the pools on the low time frame. So then where you've got, on the daily, you've got these big wick highs that didn't take any liquidity. They can be targets as well, which was like this high as well. So you just see this candle here on its own, and so if they've all got their stop loss sort of clustered around that we talked about, it means there's like a big pool of money there in terms of, anyway, there's big pools of money around these areas, so you just have to think everything's sort of like, it's just time and price. And so that's why, even as well, I talked to some people and explained that that's why the higher time frame order blocks tend to hold better, because a lot more price has been, a lot more, there's been a lot more price action. There's been a lot more money in these areas to be able to produce, such a, significant area. There's been a lot of time, a lot of money, and a lot of, power to move the market at such on such a high level. And in these areas, compared to a 15-minute order block, price has only been around there for 15 minutes. But these daily order blocks, it's been within these zones, especially when you get multiple, linked up in these whole zones. Price has been trading there for, almost a week. And then you got the week, that sort of stuff. And so that's why the high time frame order blocks work so well, because price has been, trading around these areas. So there's lots of liquidity or lots of supply, or there's just a lot of people looking at these areas and trading around these areas. So when they come back into them, they're respected quite often, compared to, like a 1-minute order block. It's, it's significant to a point, but, a lot of them will fail. And that's because the, price is only traded there very, very short amount of time. So there's not that much weight on it. So, but yeah, I think the main thing with liquidity, an easy thing to spot as well, quite a good example. This candle here, when we pushed up, we took these highs slightly, but you'd almost say, it's like a very minute push of these highs. Let me turn off the sessions, maybe see it a bit better. It's a very minute, like what they call sweep of the highs. So you can almost, generally people aren't going to have their stop losses. They might, but right on there, potentially they might give it a little bit of leeway. So maybe they've survived. Most of the stop losses have survived this. So then the people that sold the market here have their stop losses here. So it's, again, it's the both ways of the market. You've still got stop losses from people here. We've then got people that, then the people that sold the market, they might have had their stop losses above here as well. And, here as well. And so you've got these clusters of, like, it doesn't have to be fully equal highs, but, we've got clusters of candles here, like I showed you before, that the market can sort of see that there's probably a lot of stop losses pulled above these areas, you know, and like the same example I said before, let's say if this candle had a pushed up here and then closed down like that, then, you know, for me, this would have been a lot, you know, this is like a much stronger order block up here and not as like, you know, keen to target it because there's not now a pool of liquidity here. You know, all the liquidity has been cleaned up by this candle and moved down. So it's not pooled in this area on the 15. Potentially there is still some obviously above here, but the person that pushed up the market, they're the ones that had a lot of money to push up the market and then push it down. And so maybe they're going to come back and defend this area. So generally you can kind of see if liquidity has been left or cleaned by, you know, equal highs or a lot of pulled, you know, highs around here that doesn't look like there really has like a really nice, you know, candle that's taken out like very easily. I'll show you like an example of quite a nice one. No, even like this one, you know, it didn't take it all, but this last white candle, even though it's not a black candle, you know, we had some wick lows here. We had wick lows here, you know, that didn't clean up, it didn't sweep anything. No, some here, all these people buying up the market here with their stop losses here. And then the market pushes back down. This candle here takes out all these lows and then pushes up. And you can kind of, I could comfortably say that this candle, you know, took out a reasonable amount of liquidity. It didn't take the complete lows because whoever got in there was defending these lows, but it took out these lows. There's not a lot of liquidity left here. And, you know, when market came back to this sort of whole area, it shot away quite. And so that's sort of the difference. You can see the strength in that.
So is the OB swept more likely as well as previous legs?
Yeah, so the more liquidity is taken, obviously the better, but it doesn't have to always have taken like major highs or major lows. It's just better if it hasn't left like equal lows. So let's say with this one, if this had to come down and just stopped here, and all of a sudden it was, you know, equal low with all of this, and there was just equal lows and all these lows were like equal, you know, it would show, you know, there's quite a lot of liquidity sitting under here that maybe price would come down and collect that before it actually went higher, you know. So it's sort of like the more that's pulled there, the more significant it is, you know. So like if you get, that's why you see Asia range can get swept quite often when it ranges, because it leaves, you know, it leaves quite a lot behind generally. You know, we've got like lows here, we've got lows here, and all that sort of stuff easily taken because the session's over. You know, like that one example, we've got lows, lows, lows. It's when it's all pulled. But like, you know, like this is why, even though this is a big wick, it was, you know, it swept a lot of liquidity. You know, it took out all these lows here, took out lows here, took out lows here, took out these lows, 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 you know, so it's quite significant. Took out a lot of liquidity here, took out a lot of lows or whatever you want to call it, whatever makes you feel better, or take a lot of stop losses and then move the market up. You know, so whoever did this, obviously it was news, had some good amount of money, you know, must have had their buy orders down here or whatever they had. You know, so when they pushed down the market, it stopped out everyone's, you know, stop losses turn into sell orders, and then, you know, tagged in his buy orders or hers or whatever, and they went. So, and that was, I think, it would be good to reiterate this as well on this call. And that was the factors why, you know, when you have it on such big time frames as well, you can sort of see it here with this huge news. I'll turn off these sessions. With this huge news dump here, you know, and then a huge pump up. It's sort of, this is just a massive version of what I just showed you on the smaller time frame. Okay, on that 15-minute time frame. You know, this is just on the 4 hour. So like this is why it's got some weight. So that's why, you know, it's literally just the same thing, but on the 4 hour. We swept all this, someone had their buy orders down here. So when we retested it, price moved off. You know, because we're much more likely to look out for liquidity above because we've already cleaned up all the stuff that's locally here. You know, all the lows, all the stop losses, anyone's stop losses that were, you know, long from pretty much, you know, October 4th onwards, anyone that was long and had their stop losses still in the market was just stopped out, and, you know, we go from there. And that's why there's such like quite power in these moves when they, you know, finish like that. And you think, okay, we've cleaned up, done a huge liquidity sweep, and now we keep pushing the market up. It's the same on the daily. Really good example of it up here. I think the more examples, the better. And then you can start finding yourself, even post in the group. You know, I think it's good when you're doing your daily analysis. Do what I do as well, like when I'm sharing my 3-day analysis. Do that for yourself as well, and then look at mine, you know, and then compare. You want to have like you want to be thinking yourself, see what's happening in the market and why it's doing what it's doing. So this is another example you can even see on the daily. You know, so we had, I'll zoom in a bit. We had like wick highs here. It looks pretty clean. Hold on. Wick highs here, and they didn't get taken out by these next highs. So then, you know, people that were selling the market here would have their stop losses around here, stop losses above here, stop losses above here, you know, so we've got all these equal highs here. So liquidity is just sort of pooled here. And then look what happens. We have a huge push up, takes out all these equal highs, all these stop losses that are above here, and then the market gets pushed down quite heavily, and then we keep following in that direction. You know, it's quite clean on the 4-hour, you can see on this one, but it's just finding for those pooled stop losses, there's pooled equal highs or close to equal highs, and that's where the money's probably going to hunt, because they know there is money pooled there that they can easily, you know, because they've got bigger position sizes than us, so they need a lot of money to be able to move the market and, you know, be able to get into their positions, so that, you know, they need all these stop orders to be able to like fill their positions and push the market down, you know. So it's like super clean here. Okay, another example, you know, so they've sold the market. So you think of a stop loss on a sell is a buy order as soon as it gets hit, you know. So as soon as this gets hit, it turns into a buy order. What I explained before, you know, so we have all these stop losses. So what this guy would have done, he probably had, I don't know, maybe a huge limit order up here above all of them. And so when price hit these stop losses, they turn into buy orders. So then the buy orders then hit his sell order, filled all his sell order without, you know, getting too much slippage, because there's so much volume in all of these. And then, you know, sell order then just, you know, smash the market down. So hope that's quite clear, the understanding. So look for these like clusters of lows, and you don't want to have your stop loss there, because then you become the liquidity. It's unavoidable. You will be the liquidity at some point. It's impossible to completely avoid it, unfortunately. But if you can identify these areas, you know, that are quite obvious, and avoid those, then at least, you know, you won't become liquidity as often. And, you know, and then you can actually use that to your advantage in certain instances, like we do with this setup that I showed yesterday in the video, or even the video before, to definitely watch it. You know, when you have an order block, this is for an example, you have a nice order block from New York or whatever, and you can identify that, oh, okay, we have all this liquidity here, so price might come to it. Okay, this even gives more validity or strength to this order block, because price can now take all these lows out, fill the bags, and then push up from there. So when does the candle that swept liquidity lose power? Everything sort of relative to like the range that you're in. Okay, so at this point, we had, for this for this, we had, like we talked about, we had liquidity above here because we had all these like cluster of highs that nothing looked really strong. We had, you know, a bit of liquidity around here. It's only a single high, but it's an Asia range. So, you know, it's very likely it's going to get run. We had all these liquidity on these lows. Okay, so I'll use replay mode, and then maybe it will help. We can talk through it and see how the momentum would shift and how your thinking can shift as well. So this is our low. This is the range high. I'll just delete some of this. Doesn't really matter. Interest rates are coming, so I probably won't get another trade on. So at this point, when I woke up in the morning, I was like, okay, we've tapped out of this order block here. It's a little bit trickier here. We can just use it, say this is the order block, pull it all over them, you know. But how I talked about it yesterday, we tapped in this order block and we got a bit of reaction, probably on the low time frame. There was something there. And I noticed like another, you can look at this order block as well. And you can see here, you know, see there was some lows here. It's kind of, you want to see it to be the deepest one before the push up, you know, so it's taken out some lows here, not quite here. So there's a bit of liquidity lying below here. But that was why I was waiting for confirmation. It was still New York order block. We had all these lows here from Asia. We had the highs up here as well. And so we're looking, okay, which way are we going to go first? I would have ignored this potentially. If we pushed up and we took out this, we have to think, okay, now we've taken out all this liquidity to the upside. Okay, so where is the rest of the liquidity? To the downside. Okay, so price is more likely to come down, at least take out this, if not take out the rest of this, and, you know, and tap into our extreme or something like that. So you have to think it follows it. So if it took out all the top side liquidity, okay, where's it most likely need to come next to then move the market again? It's got to come and take out, you know, the bottom side. And now once all that's out, then okay, we've probably got a bit of top side built up and we can keep moving the market. Okay, so what happened here was the opposite. We had, I'll delete that. What we had here was we've moved down and we haven't taken it all, but we've tapped into this order block and we've taken all this bottom side liquidity out. Okay, and so we're thinking, okay, so where's the liquidity left? We've now got a little high here put in. We've still got these highs here, still got these highs here we identified later. I wasn't entering right on here because I was like, okay, I want to see some strength. So what happened? I was watching this. I wanted it, this high here that took some liquidity from here and pushed us down. I wanted to see that broken because, you know, it did sweep these highs over here. So potentially there's some strength. And I would think if the market rejects this high, we're going to go deeper, because this was an area that pushed up, took out some highs, and then pushed the market in the direction they wanted it to go. So I thought, okay, if we can break and close above this high, then it's going to confirm this low. And so I was waiting, I had my alert there. We then had our break of the high. We broke this last high that pushed us down. We had taken all this this side liquidity. We had slightly gone above here, but almost like a minute amount to, you know, give us almost equal highs. I reckon the people with their stop losses might have survived this one. Otherwise, there's still all this liquidity up here. So I figured, okay, we've got strength out of this sweep. We've broken this demand. You know, we've still got this liquidity left up here from New York session. We've done this on the open of Frankfurt. And I know when Frankfurt does a good move like this, London should respect it. So I had my entry here. Okay, and then, so what happened is we pushed up, and it can be as quick as this. So I recommend new guys, you want to target the take of this liquidity. I closed out just when it came back in. It was kind of a similar situation. I thought, what I showed you before, I thought if we could go higher, it's going to go higher. It's going to do that claim that I wanted, claim the high and keep moving, except it lost it and rejected the high just like today. And so I sold out here manually. But then we think, okay, we've just taken all this upside liquidity is gone that how identified before. Okay, so where's all the liquidity now? It's down here. You know, it's all these lows. If we're talking about local here, which we trade the 15, you know, it's all these, you know, it's all these lows here that haven't been taken out, And at this, you know, when we swept the highs, it was, you know, this low here as well. And even these wick lows as well that hadn't been. So we have to think, okay, we've rejected the high, we're coming back down. Okay, we need to look at where, you know, is there anything of strength here? Or is it all just look like there's like equal lows, some lows that are just sticking out that haven't taken any lows? And we have to find out, okay, where's the liquidity for us to now move the market back up? And then we look for that, okay? And then we don't know how much liquidity it needs to take, but we know we've got a nice order block here, which I'll show you as well. You know, you know, look at the wick low on this one, and it's cleaned up, you know, some local lows. It didn't clean up like the main low, but like to see that this isn't an equal low like this, or it's not like a slanted low like this, you know, where we know there's like clusters, there's stop losses here, there's stop losses here, there's stop losses here. It's like a cluster of orders. So it's very likely they're going to have their buy orders just below here because they know they can stop out all these people, fill their bags, and then run on with it. And then you think about that, once these are gone, then where's the liquidity? I'll play it out. I think it was the news that did it. So yeah, pretty much I'm pretty sure we, you know, look like we manufactured a bit of liquidity here, which I'll point out to you. Okay, so this was actually all right. You had this sweep here, which gave it a bit of strength, but then you left some highs here. We then rejected. We've now got wick highs here. You know, so we're thinking, okay, people have got all their stop losses here, stop losses here, stop losses here. Mark it out in your charts, okay? So we've got equal highs here. We've got this high here that was a bit of strength. That's what's probably kept this, you know, someone that's put this up and pushed us down has then rejected the market, similar to what happened just before when we were shorting. But we have to think this is sort of counter trend. We're still on the 15-minute uptrend. This is, you know, our targets are like breaking the low or something like this, but you know, it wasn't anything I was taking here. But now we've got, you know, we've got stop losses here, stop losses here. So the market's got a reason to come back up, you know. So once we take all this liquidity, okay, all this is gone. Where are we coming to now? We can, you know, fuel the move up because we push out here, these turn into buy orders, and we can keep pushing the market up. And you'll probably see as we move up, it would have manufactured liquidity to come down. And, you know, it's just how the market, it's literally how the market functions. And so, hold up. And so, yeah, happened pretty fast. So pretty much, this is a huge news thing. We've taken out all these lows that we talked about, you know, slanted lows, all this pool liquidity here, held the extreme order block because we know they're the strong ones, you know, because the big guys, the extreme holds so often because the market makers want to get in the best position as possible. Okay, so they're not going to like, you know, sometimes they will. That's why I like flip zones as well, because, you know, they're the guys that buy the bottom and they're the ones that push us through the highs, because it takes big money to break highs, you know, because you've got a lot of retail traders, got a lot of traders, you know, trading support and resistance, and they see this as a resistance level or whatever. And so you've got to have a lot of money to push through and break these highs. And same, if you want to put in bottoms, you've got to have a lot of money to, you know, buy the market and stop it going down and, you know, say that this is the bottom. So, you know, these sorts of areas, the extreme is, you know, they want to get on the best price. You know, they want to buy here. They don't want to buy near the top. You know, they're not silly. That's why extreme holds quite often. And that's why these flip zones hold as well, because they're the ones that have bought the bottom and then, you know, they've re-entered here to push the market in the direction they want to go. And so then they get it here and they push it up. And so they sell it back down and then they buy it again. And, you know, if you just got to think where the big money wants to get in, that's where we want to get in. And the extremes, you know, they're the ones that put in the bottom. So we want to join, you know, buying with them. And, you know, we don't want to be, the person that's, you know, shorted the market here and thinking it's going to break the lows when we know we're in a 15-minute uptrend, and, you know, we should be buying with the big money to keep pushing us up. So like I said, we cleaned up all the liquidity here. And, you know, as soon as this wick happened, where's the liquidity? It's now above here, above here, above here. And where does the market go? You know, it hunts that liquidity down and we take the highs again. Okay. And, you know, so it will help you to mark it out and identify, and even post your charts in the chat. And we can see if you've identified, or if it's like a cluster, or a good area to avoid, or, you know, that sort of stuff. And so then that builds on our good order blocks. So now we had this order block that we talked about that had taken so much liquidity from all these lows, you know, with such power and strength, and plus it ticks all the other blocks. We've got some imbalance left behind. We've broken structure up the top, you know, all the boxes are ticked. And so we know there's going to be a nice strong order block to then, you know, keep the market moving in the direction we want to go. If it comes back to it, you know, then we can take trades out of it. Because what you'll see is on the way up, you know, it's not that obvious because it's just single candles where we have, you know, a single candle low, some lows, some lows. There's little bits of liquidity that built up, but the market moved quite sharply. So it was why I trade these flip zones, is when you get quite impulsive markets, you can get price that just breaks structure, little tag, and you're off again, and it keeps moving up. Obviously it wasn't, you know, the person that bought up here wasn't keen to buy up here. They wanted to get in again deeper. So we broke through, and then we headed to the extreme. But as we did it, I'm sure price probably built up a little bit of liquidity here. So we now have, what do we have at the top? These two equal highs. Okay. Another, you know, wick high here. Maybe there's stop losses here. You know, another push up on these wick highs. You know, so we've now got people that shorted the market here, stop losses shorted here, shorted here. We've got equal highs up the top, you know, where there's just liquidity sitting up the top here as well. And, you know we're in a 50-minute uptrend. This is our nice order block. And the market has a reason to push up because there's liquidity here. You know, that's what I was talking about with, I wanted to see market come in like that into my order block, because I want it to manufacture these highs to give price a reason to go back up. You know, so if price just absolutely obliterated through and just destroyed all this, then there's not really, you know, any liquidity built up, you know, above there for price to, you know, have a reason to push up. And it means that it's probably going to go lower to find some lower liquidity before it can like push back up, you know, so it doesn't have a reason to go higher. And that's sort of what I was talking about with my with the post that I posted in today with, I can play it through. I'll just go up to, yeah, we're still messing around this area. So yeah, here we held the low, and where we get, you know, we hunted first, we hit this liquidity pool, and we hit this, and eventually we took out the highs. And so it's the same thing again. You know, we took out the highs, and, you know, now you can probably see it a much better that, okay, we just cleaned up all these liquidity from here, took out the highs. Where is all the liquidity now? Under these lows, under these lows, under these lows, you know, under these lows. And that's, you know, why price comes back. And it's the same thing we're seeing right here. You know, there's now equal highs here. You know, so it's very high chance that we're going to at least come and swipe these out. You know, it's not as equal double tops or equal highs up the top like this. So, you know, there would still be stop losses above here for sure that want to be taken. It's not as obvious. It's not like a pool of, you know, liquidity. It's sort of one candle up and then a push down. But definitely here with the wick high and these highs, and, you know, there's definitely a liquidity pool above here. You know, there's some building up down here. So that's why you can sort of see the market maybe doing something like that. And that's when it gets a little bit tricky to know exactly the direction because you get these pulls either side, and that's why you revert back to, okay, we're in a 15-minute uptrend. This is our extreme order block. This is, we're better off trading pro trend. Big news coming, we'll wait for that. But you always, see what happens. If it cleans up, whatever it cleans up first, it's probably going to go the opposite direction to that. And that's, so if it pushes down like this and takes out these lows first, it's probably going to come back and take out these highs. And same with the opposite. If we first, because you have to think, where's the liquidity left behind? If we pushed up and took this liquidity, then shit, we've left behind this. We want to collect that. It doesn't have to happen straight away, but market usually cleans itself up. So I don't know. Hopefully that was like reasonable explanation and you guys understand liquidity, but definitely post your charts more. But yeah, that's pretty much the basis of liquidity. I would recommend marking it out on your chart. I do it. I mark it out on my chart every day, all the time, so I know where it's going. So, but yeah, I think that's enough for today. I think liquidity is like good. It's what fuels the market again. And so being aware of where the most of it is, especially on the time frame you want to trade. I'll see you guys in the Discord. Let's see what the what is it again? Interest rates, inflation rates has for us to offer. Let's see, if where we go. It's hard to predict because with these sorts of big news events, local liquidity makes a difference, but they're hunting big stuff on these big news events. So like with this, you can never predict how low it's going to go. Maybe it tags into some order block you had ages ago, but like, what's the odds of you picking that order block and having a limit order on it? It's not really feasible to replicatable. So anyway, guys, hope you enjoyed that. Thanks again for listening. Appreciate it.